Hi, this is Antoine Harris with Platinum Bridge Wealth Strategies, and I wanted to talk to you a little bit about mutual funds and some of the things that you may not be aware of that are very important to know if you're going to invest in funds. Now, many of you have mutual funds in your 401ks and your IRA accounts and sometimes outside of these retirement accounts. So the first thing I want you to be aware of is that there's many hidden costs associated with mutual funds. So when you buy and sell stock on your own, every time you place a trade, you have to pay a commission. It's the same thing for the mutual fund managers. When they're buying and selling stock within that fund, every time they trade, they have to pay a commission. And these commissions are hidden. They're not disclosed. It's very difficult to find this information. So there's something called the net asset value. When you look at your fund, look for the NAV, or the net asset value. It's a literal term. It simply means that it's the value of all the investments within the fund minus all of the expenses. Well, the trading costs are one of the largest expenses incurred by a fund, and those costs are directly deducted from the value of the assets within the fund. That's why it's very difficult to identify what those costs are. But I've looked at funds that trade a lot, and those costs could increase the fees by 2, 3, 4, up to 11, 15% in some cases. So please be careful here. And if you need help, I have a tool where I can identify some of these hidden costs for you if you have some funds that you're concerned about. The second thing to be aware of, and this is especially true outside of the auspices of a retirement account, in a non-retirement account, if the fund is trading a lot, like in the previous example, you also incur pretty significant taxes. So at the end of the year, there may be a tax bill that you're not aware of, that you had not anticipated because the fund traded so frequently. Every time they trade and sell a stock at a gain, you are required to pay your associated tax along with that fund as a shareholder. Now, the final thing that you may not be aware of is that within funds, there's something called embedded gains. Now, say if you buy into a fund in the year 2019, and that fund bought Google stock back in 2006. Well, you did not participate in those gains for the previous 13 years, but if they sell Google in the year 2019, even though you're a new investor, you're responsible for your part of the taxes on that gain for the previous 13 years. They're called embedded gains. This is especially problematic if you own it outside of a retirement account. So please be aware of these things. If you have any questions at all, this is Antoine Harris with Platinum Bridge Wealth Strategies, and I'll talk to you soon. Have a good day.